Good afternoon and welcome to the Petra Diamonds Limited investor presentation. Throughout the recorded presentation, investors will be in listen-only mode. Questions are encouraged and can be submitted at any time by the Q&A tab situated in the right corner of your screen. Just simply type in your questions and press send. The company may not be in a position to answer every question it receives in the meeting itself. However, the company can review all the questions submitted today and publish responses where it is appropriate to do so. Before we begin, I'd like to submit the following poll. I'd now like to hand you over to Richard Duffy, CEO. Good afternoon to you, sir.
Thank you and good afternoon, everyone. Thanks for joining us for our discussion on our fourth quarter operating update for financial year 2024. Jacques has been unable to join me on the call today, and so I have Johan Snyman, our CFO designate, with me on the call. I'm Richard Duffy, CEO of Petra Diamonds, and as I said, Johan Snyman, CFO designate, is with me, and we'll cover off the key financial metrics a little later. After taking you through our announcement, we'll open up, as usual, for any questions, and you will be able to post your questions via the facility provided, and at the end of this session, we'll then read the questions and answer them. If we can move on to the next slide. Thanks. Starting with safety, which, as always, is our number one priority. Our ongoing focus on remedial actions and behavior-based intervention programs have supported a reduction in lost time injuries, which fell 33% to 2 for the quarter, with a similar reduction in the lost time injury frequency rate, which fell from 0.2 in the third quarter to 0.13 in Q4 FY24. We saw a significant improvement in our safety performance for the full year, with our lost time injury frequency rate reducing by 33% from 0.24 in financial year 23 to 0.16 in financial year 24. Lost time injuries improved by 41% from 17 in the previous year to 10 in financial year 24. We were also pleased to celebrate 7 years fatality-free earlier this calendar year and continue our health and well-being programs to support both our culture and performance. Turning now to our operations, total tons treated was slightly higher at 2.99 million tons for the quarter, bringing total tons treated for the full year to 11.7 million tons compared to 9.03 million tons in FY23. Largely reflecting the restart and successful ramp-up of Williamson during the year. Group diamond production increased slightly for the full year to 2.73 million carats, just slightly below guidance of between 2.75 and 2.85 million carats, with the shortfall being largely due to mechanical issues that occurred at Finsch in quarter 3 and which have since been resolved. Performance at Finsch has been improving with better grade recoveries reflecting on the back of lower dilution, with a focus on operational stability following the transition from continuous operations to a 2-shift, 5-day configuration. At our Investor Day, we provided more detailed insight into the diamond market, and so today I will keep it brief. Tender 7 saw like-for-like prices down 3.8% compared to Tender 6, which is in line with our expectations and reflects the softer diamond market. We expect market conditions to improve in the new calendar year and continue to see supportive market fundamentals in the medium to longer term. At our recent Investor Day, we provided pricing assumptions for FY25, which remain unchanged. As mentioned at our Investor Day towards the end of June, we are responding to the increased importance consumers are placing on provenance and traceability through our traceability pilot for all of our gem quality diamonds, half a carat and up. We are targeting rolling this out by the end of this calendar year, which will enable our mapped diamonds to be traced from mine to finger, enhancing the appeal and desirability of our diamonds. I will now hand over to Johan, who will take us through some of the key financial metrics. Johan.
Thank you, Richard, and good afternoon, everyone. Revenue for the quarter, which includes $1.3 million revenue from profit share agreements, totaled $113 million, a 71% increase on the previous quarter, with the sharp increase reflecting the timing of Tender 5, which took place at the beginning of quarter 4, with $49 million falling into the last quarter of the financial year. Total revenue from rough diamond sales for the financial year was $366 million compared to $324 million in FY23, excluding revenue from Koffiefontein. Year-on-year volume variances were affected by the deferral of certain parcels from FY23, which were sold as part of Tender 1 of FY24. Pricing was weaker quarter-on-quarter due to product mix, with the third quarter benefiting in particular from the sale of the 14.76 carat exceptional color and clarity blue diamond recovered from the Cullinan mine, which the company sold into a partnership agreement for sale proceeds of $8.2 million. Weakness was also evident in like-for-like pricing, particularly for coarser goods, where demand was soft and specifically for sizes between 1 and 10 carats, a category typically favored by Chinese buyers. For the year, average like-for-like prices were down 12.4% compared to the previous financial year. Moving to our balance sheet, gross debt decreased to $271 million at 30 June 2024, down from $280 million as at 31 March 2024. During the second half of the financial year, the company repaid $23 million of the revolving credit facility with Absa Bank to reduce interest costs. We also repurchased and cancelled $5 million of our 2026 second lien loan notes, which provides an opportunity to the company to systematically reduce debt, something we will look to continue doing. This leaves Petra with around $72 million of headroom from the RCF, which, together with our unrestricted cash balances of $27 million and diamond debtors of $31 million, means we have $130 million of available liquidity at the end of the financial year. Net debt reduced by $31 million over the final quarter to end the year at $201 million. As announced at the Investor Day, we expect a sustainable reduction in operating costs of $30 million per annum from FY25. We also expect capital expenditure, including development and sustaining capital, to be smoothed to about $100 million per year at our South African operations, with guidance for FY25 being between $88 and $97 million. I will now hand back to Richard to provide some concluding remarks.
Thank you, Johan. In closing today, I would just like to provide a reminder of the resilience that we have built into our business that presents a compelling value proposition in the short, medium, and longer term. We have world-class assets with long life potential, a de-risked and more reliable production profile focused on cash generation from this current financial year. We have a disciplined capital allocation framework with a self-funded, smoothed capital profile, which enables us to better withstand market cycles. Our value-driven growth strategy encompasses organic growth for our existing assets and includes potential inorganic opportunities. Sustainability is embedded across our business, delivering value-accretive outcomes. We see a supportive diamond market in the medium to longer term, with Petra set to benefit from consumer focus on traceability and provenance. And finally, we have confidence in refinancing our second lien notes, which mature in March 2026. That concludes our presentation, and I would now like to hand back for our questions and answers.
Perfect, Richard. Johan, thank you very much for your presentation. Ladies and gentlemen, please do continue to submit your questions just by using the Q&A tab, which is situated on the top right-hand corner of your screen. But just while the company take a few moments to read the questions that have been submitted today, I'd like to remind you that the recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your investor dashboard. As you can see, we have received questions throughout today's presentation. And Patrick, at this point, if I could hand over to you to chair the Q&A, that'd be great, and then I'll pick up from you at the end.
Thank you, moderator, and good afternoon, everybody. The first question we have is on the diamond market from Andrew. You mentioned the current diamond market weakness is expected to continue through to the end of the calendar year. What measures are you taking to mitigate the impact of this market condition on your business?
Thanks, Andrew. I think we anticipated the weaker market back towards the end of the last calendar year when we saw the moratorium in India from the cutters and polishers. There was a 3-month moratorium towards the end of last year. And we started to implement various measures back then, which included a deferral of a significant portion of our capital spend for the remainder of financial year 24, together with targeted cost savings. What you would have seen in our Investor Day presentation is that we have now delivered on $30 million of annualized sustainable cost savings from this financial year 25 going forward. We've also replanned our business to deliver a more smooth capital profile, which will be at or around $100 million annually, as Johan outlined. So we have proactively identified and responded to what we expect to be a weaker market through to the end of this calendar year through the measures that we have taken. And I think you would have seen that reflected in the $11 million reduction in our net debt from the end of December 23 through to the end of June of this year. So I think the steps we've taken in making our business more resilient will ensure that we are able to successfully navigate through this weaker market.
Thank you, Richard. And a follow-up question from Andrew on the longer-term diamond market. What are your expectations for the diamond market in the medium to long term, and what factors do you believe will drive a price recovery?
Yeah, so I think if I talk about the reason for our view on the market fundamentals being supportive in the medium to longer term, I think they really go to the fact that we are moving through the back end of higher interest and inflation rates that have actually, I think, been stubbornly high, but are definitely now coming off. And we would expect to see that start to benefit the market. We also have seen some elevated inventory levels across the full diamond value chain. And as we move through towards the end of the year, we expect to see some of that inventory reduce, which going into the next calendar year would provide some pull through as the retail demand is expected to continue. On the supply side, we see an ongoing decline in global production of natural diamonds, and that is important in terms of the supply demand or the structural supply deficit that we refer to. And if you look at polished diamond demand growth that is projected, and that was a projection that Boston Consulting Group prepared, we expect to see 2 to 4% annual growth rate from 20 through to 33. Importantly, the US is 50% of global demand, and we expect to see ongoing growth in that demand out of the US. China has been an area that has disappointed in terms of returning to the demand we had expected, and we do see some growth over the next 10 years coming out of China. But importantly, what we see in particular is the emergence of India on the back of their very significant growth in the middle class. And so we expect to see that wealth translate into much stronger demand coming out of India that we expect will make up for any weaker demand coming out of China. Lab-grown diamonds have been a disruptor in the natural diamond space, but if you see where lab-grown diamonds are currently trading relative to natural diamonds. They trade at a discount of 80 to 90% of natural diamonds, and have firmly established themselves in a different product category in the diamond market. So they provide a cheap entry point, but they are clearly now differentiated from natural diamonds that are rare and unique, and certainly can't be replicated as lab-growns. And importantly, what we've seen in the retail space is retail jewelers moving away from lab-growns given the collapse in price and margin, and moving towards favoring natural diamonds again, which will be positive for the business. And perhaps an important point to note is a number of lab-grown producers, most notably De Beers Lightbox business, have indicated that they're no longer going to be producing gem quality lab-grown diamonds, but that they are switching their lab-grown business into industrial applications, particularly in the semiconductor space. So all of those are important developments that lead us to a view of the market being supportive in the medium to longer term. And we think that the development of the traceability technologies, where we can trace our diamonds, and as I mentioned, our half a carat in the rough and up, all the way from mine to finger, will enhance that whole purchase experience of natural diamonds and verify the provenance of our diamonds, and we believe will add to the attractiveness and in time margin for natural diamonds. Thanks, Patrick. Patrick, are there any more questions?
Yes, I have a question from Yassine. What is the bank appetite to grow their exposure to the company? Would a larger bank debt be a possibility going forward?
Thank you, Yassine. Yeah, we, as we again mentioned at the Investor Day, sharing our 5-year guidance and an overview of the life of mine potential of our assets, that was really the foundation for us in providing visibility over the coming 5 years, and indeed the life of mine, to engage with different pools of liquidity, specifically with regard to looking to refinance our 2026 loan notes. And we certainly are talking to in particular the South African banks, and we are engaging with them to establish both appetite and capacity. And we're also looking at other opportunities to provide funding for the refinancing of the loan note. So we're at the early stage of that process. We're confident that we will get that refinancing away, as we indicated, by the end of this calendar year, and we'll provide updates as we progress in those discussions.
Thank you, Richard. I have a follow-up question on that from Yusuf. Should we expect to see more bond buybacks ahead of the refinancing?
We have indicated that we would opportunistically look to continue repurchasing the loan notes. We've repurchased $5 million so far. And so yes is the short answer, but we also need to note that the bonds are fairly liquid. So that's not something that is likely to happen quickly or in any significant volume, but we will, yes, continue to opportunistically repurchase bonds as and when we can.
Thank you, Richard. And again, on our refinancing, what do we feel as a company we need to achieve to be in a position to refinance the 2026 bond? Do we have a kind of target metric that we're looking to ahead of that?
No, I think that the key for us in beginning to address the refinancing was sharing our latest plans and guidance with the market, which we've now done. I think we're in a position on the back of what we have shared to indicate that we're quite capable of refinancing the bond, and that's the process we're busy with at the moment. So we're comfortable with the business metrics and where we are currently to be able to get on with the refinancing.
Thank you, Richard. I have a question from Ruark. Are there any other commodities that Petra Diamonds would consider mining, or is our focus going to remain on diamonds?
Look, I think for the moment, it's clear, having rebased the business in terms of our cost structure and smooth capital profile, that the immediate focus is on optimizing the current business and obviously getting the refi away. And I think there are opportunities in the diamond space, but there may be opportunities outside of that which we will look to later, once we've addressed the immediate objectives as outlined, specifically the refi. And I expect that once we've done that, we'll be able to start to consider opportunities both inside, in particular, the diamond industry, but in time potentially outside of that as well.
Thank you. I have a question from Steve. How is the state of relations with Tanzanian government in respect of Williamson and its plans going forward?
Yeah, our engagement and relationship with the Tanzanian government is constructive and positive. We don't have any issues related to that. We're obviously still trying to complete the implementation of the framework agreement that was signed some time ago. And we're also looking to finalize the transaction with Pink Diamonds around selling 50% of our stake in Williamson. But that work is ongoing. Williamson, as mentioned, has effectively ramped up to full production and is running. And as those transactions progress, we will keep the market updated.
Thanks, Richard. At present, there are no further questions on the Q&A.
Perfect. Patrick, thank you for chairing that Q&A session. And Richard, Johan, thank you for answering those questions from investors. Of course, the company can review all the questions submitted today, and we'll publish those responses on the Investor Meet Company platform. But just before redirecting investors to provide you with their feedback, which is particularly important to the company, Richard, could I just ask you for a few closing comments?
Thanks very much. Really just to say thanks to all of you for your participation. And of course, as always, if you do have questions that haven't been addressed, please refer them through to Patrick and we will get back to you. And we look forward to talking to you all again in the near future. Thank you.
Perfect. Thank you once again for updating investors today. Could I please ask investors not to close this session, as you'll now be automatically redirected to provide your feedback in order that the management team can better understand your views and expectations. This will only take a few moments to complete, but I'm sure will be greatly valued by the company. On behalf of the management team of Petra Diamonds Limited, we'd like to thank you for attending today's presentation, and good afternoon to you all.